Overall, just a lot of good news. And given this good news, I'd expect both REITs and the overall economy to grow over the next year, and that this footprint will be bigger next year than it is this year.
Hello and welcome to the REIT Report. I'm your host, Sarah Borgson-Keto. Today we're taking a close-up look at what the latest data shows about REITs and their impact on the national economy. Nareit commissioned EY to estimate that information for all US REITs. And with me to go through the numbers is Brandon Pizzola, economist in EY's Quantitative Economics and Statistics practice. Brandon, welcome to the podcast.
Thank you for having me.
Brandon, what is the latest EY data telling us about REITs and how they contribute to the US economy?
So the headline result is REITs have a very significant economic footprint in the U.S. economy. The headline number is REITs support 3.5 million full-time jobs, and those employees get paid $278 billion of wages and salaries. And there's a lot in here. There's public listed REITs, there's public non-listed REITs, there's private REITs. It's also worth noting in here, in addition to REITs, there's the taxable REIT subsidiaries that engage in a broader range of activities than their REIT parents. Also in here is the spillover effect into the broader economy. So REITs, they purchase goods and services from other businesses and support economic activity there. REITs pay their employee income, and those employees go out into the economy and spend that money at grocery stores, restaurants, and whatnot, and support more activity there. So there's a big footprint both at the REITs and spilling over into the broader economy. And one thing I do want to flag is this does not include REIT tenants. So if a REIT, say, owns a building and there's retail activity in there, that tenant's activity is not included in there. If you were to include tenants, it'd be even bigger than that 3.5 million jobs.
Great. Can you elaborate more on how the economic impact of REITs can be felt in ways that may not be obvious? And how do you go about calculating that?
A good way to think about it is about four buckets of economic activity. There's operations, construction, dividend payments, and then interest payments. So I'll go through each of those. So operations is probably what you immediately think of. So there's someone actually working at a REIT or a taxable REIT subsidiary, which is a REITs employ people. There's a lot of construction activity occurring, both because there's routine maintenance on REIT properties and also REITs demand new buildings. So there's construction that occurs because REITs are going to purchase those buildings. The dividend and interest payments, this is getting at REITs pay out the overwhelming majority of their income as dividends. They also make interest payments. People say if you own the S&P 500, you own REITs. A lot of people own REITs. They get paid dividend income. And those people go out into the broader economy, again, say, spending that money at grocery stores and restaurants and supporting economic activity. In terms of how we calculate it, the overall summary metric we use is something called an economic multiplier. And generally speaking, we estimated this year that REITs have a multiplier of 2.8. That changes a bit from year to year. But what that means is for every 10 workers at a REIT, they support 18 workers somewhere else in the economy.
And are there any shifts or trends that are particularly noteworthy in the latest data?
I think the one thing to flag is REITs continue to grow. So I mentioned our headline numbers that in 2023, REITs supported 3.5 million full-time jobs in the US, those employees earning $278 billion of labor income. We also have done this study more or less annually for the last decade. So relative to 2022, the footprint is about 100,000 bigger. And relative to 2021, it's about 300,000 bigger. So over the last couple of years, you can see that the footprint of REITs has grown from 3.2 million in 2021 to 3.4 million in 2022. And now we're at that 3.5 million. That's our headline result this year.
And how does what you're seeing with REITs compare to broader corporate trends?
I think the one thing I would flag here is just how diversified REITs are. So you might immediately think, oh, REITs specialize in either owning or financing real estate, but there's all sorts of properties. There's apartments, data centers, offices, industrial facilities, shopping centers, healthcare facilities, telecom, hotels, self-storage. So there's a lot of diversity in what REITs own, which I think is notable of the REIT sector. And then something I mentioned earlier is that something that is different about REITs than most other corporations is how much of their income they pay out as dividends. So REITs are required to distribute nearly all of their taxable income, at least 90% as dividends to shareholders. Most REITs pay out 100% of their dividends. So it's just worth noting that REITs are different than a lot of other corporations.
And looking ahead, what is EY's macroeconomic outlook and how would you expect that to impact the REIT economic contribution data trends?
So in contrast to what economists have been saying now for the last 2 or 3 years, a lot of folks are now saying that there's a lot of good news on that front. So right now we have robust economic growth. We have labor markets coming into balance. Inflation is closer to the Federal Reserve's 2% target. Most U.S. GDP forecasts see growth going back to more typical levels, and recession's not really in the forecasts. Just to throw on more good news, the Fed cut the interest rate target by 50 basis points in September. The market expects another 50 basis points in November. And over the next 12 months, it's expected that the interest rate will drop by 200 basis points. Overall, just a lot of good news. And given this good news, I'd expect both REITs and the overall economy to grow over the next year, and that this footprint will be bigger next year than it is this year.
Braden, thank you so much for your insights today.
Happy to be here. Always happy to chat REITs.
And to our listeners, if you enjoyed this episode, please subscribe or leave a review on your favorite podcast platform.